You're watching Executive Decision, where we go head to head with leading corporate voices and business leaders and policy makers to understand how India's COVID-hit economy is shaping up. I'm very happy to be joined this week by corporate icon, one of India's top bankers, Deepak Parekh, chairman of HDFC, whose wise counsel is sought in boardrooms and by policy makers across the board. Thank you so much indeed, Mr. Parekh, for joining us on Executive Decision. I hope you are well and staying safe in Mumbai. Great to be talking to you. Mr. Parekh, let me just start by asking you a sort of set the ball rolling question by getting your take, Mr. Parekh, on where we stand with the Indian economy, because it's been a rough year. We are seeing some signs of recovery, but overall, how worried should we be?
You know, good morning. You know, it's always said that never waste a crisis. I said, to my mind, what has not been fully recognized and appreciated is that we in India have in fact undertaken amongst the toughest reforms during the pandemic, or at least laid the foundations for made the groundwork for these reforms. You know, you can talk about education reforms 2020, it changes, it's a game changer for educating our children in a more holistic and skill-based learning. We talk about agricultural reforms. Now, agricultural reforms I know are having some issues now, but once the impasse is over, by discussions and consensus, I'm sure it will be again a beneficial reform to have. And agriculture is always a sensitive issue. But we've also had labor reforms which are also difficult to implement, but 44 laws have been converted into 4 laws. Four points, 4 codes. Staff welfare, staff wages, staff security, worker security, industrial relations. So I think, you know, we've not really wasted the crisis. And, you know, I can go on. There is health and education also. On the health, we're talking about National Digital Mission in Health. So basically, I think according to me, the worst is behind us. We see much better numbers across the board. And I'm very optimistic about the future. The only flaw I see is if a second wave, a major second wave of this new variant of virus hits us in India.
Okay. Now, Mr. Parekh, okay, let me take you up on some of that, because as far as these reforms are concerned, I don't want to get into it straight away, because as you know, there's a lot of contestation going on over them, particularly with the farm bills. But just about the fact that you're seeing signs of recovery. Now, some people are questioning whether the recovery is truly across the board. Is it benefiting all Indians or only some Indians? And one of the things that they cite as an explanation for that is that if you look at manufacturing has actually shrunk in terms of what is called gross value added, but in terms of profits of listed manufacturing companies, they've actually gone up. And one of the explanations for that being cited is the fact that companies may not be producing more, but they're making profits by cutting back on jobs, laying off people and cutting back on salaries. So the top tiers of the economy may be doing well, but a lot of ordinary working Indians are actually feeling the pain.
No, so you are absolutely right. There are certain segments of our society which are still in acute pain and distress, particularly if you see the service sector. Anyone who's working in hospitality business, restaurants, civil aviation, travel agency, small and medium, very small businesses, they all have been impacted, and the turnaround has not yet happened in many of these sectors. I agree the larger companies have turned around much faster, but you know, if you see, there's a broad range of recovery. It is not necessarily only in 1 or 2 sectors. It is in automobiles, 2-wheelers, it is in tractors, it is across in affordable homes, and housing has seen a boom. So there are a number of sectors. The petroleum consumption, the steel and cement consumption has shot up. So there has been an overall improvement. and some manufacturing companies are still hurting.
Yes.
But again, I'm very optimistic that this is a passing phase, and we need to basically look after the vulnerable society.
But when one talks
because
of,
they are the most badly impacted.
But when one
talks
of,
sorry,
I'm asking, when one talks of looking after, when one is talking of looking after the vulnerable, the question really is about the role of the government and the role of private sector. Let's just look at the government. Now, the government has announced, as you know, many of these packages. They say these are Atmanirbhar packages. They claim this is almost equivalent to 15% of GDP. That's the amount they've spent. But if you look at the hard numbers, Mr. Parekh, and I'm sure you've seen the analysis, the actual spending by the government is just a fraction of GDP, only 1 to 2%. So, is there a case for the government to actually step up and do much more than it's doing?
There is certainly a case, and we've been hearing for some time that the government is working on another impetus, another stock of funding to the vulnerable societies, spending more money on infrastructure. Health and education are the two most important sectors where the government has to double their contribution to GDP, which are very, very small at the moment. So, you see, what has been done, as you say rightly, it's a small percentage of our GDP, but the heavy batting has been done by the Reserve Bank of India by providing adequate liquidity to the industry, be it the manufacturing, be it the service, be it small scale, be it housing. So it's a Reserve Bank that has taken the burden off, and you know, they have done the heavy lifting.
But is that
I agree.
Well, is that enough though? Because I tell you what, you're right. There's a lot of liquidity in the system, but our companies, and this is again CMI, Center for Monitoring Indian Economy, their analysis finds that companies are not investing enough in expansion, in new projects, in employment. They're plowing a lot of it back into savings. They're parking the money with the banks. They're investing. It's not creating enough jobs, and that's why the CMI's latest data, in fact, shows that there have been close to 4 million jobs lost in October and November alone. 40 lakh, 4 million jobs.
So, you know, the revenues even of the large companies have increased, but no, I mean the revenues have increased, but it's not actually revenue, it is cutting costs.
Yes.
And as you said, part of it is streamlining and rationalizing manpower.
Right.
But you know, companies normally spend a lot on traveling and advertising and entertainment, and all these costs have come down significantly.
Okay.
So
there is
can you repeat your question, please?
No, that was my question, in fact. That
I can't hear you properly.
Okay. No, my question was you answered that question actually, Mr. Parekh, where you said that companies are ending up saving quite a lot, but they're not necessarily investing in creating fresh opportunities of either investment or jobs, which is why, as I said, CMI data, Center for Monitoring Indian Economy data, is projecting almost 4 million job losses in October and November alone.
Yes. See, the concrete numbers which will confirm what you are saying is that there is a very lean offtake of the banking sector.
Yeah.
The last 6-8 months, we've seen deposits increase significantly, but credit has not grown. Credit has not grown because people are not investing.
Yes.
Entrepreneurs are not putting more money in new plant, new facilities.
Right.
And there is also capital constraint by the entrepreneurs.
Right. So my question then is, Mr. Parekh, that why not corporate leaders like you, others, industry bodies, address this with the government, that unless the government also stops being fiscally so conservative, unless there is more spending, unless you create demand, we are heading into worrying times, especially for the lower tiers of the economy.
So the finance minister recently spoke about the budget that is expected shortly, that it'll be a budget like never seen before. My personal view is that in the budget, the government will increase their allocation on R&D and will give tax breaks for R&D in medicine, in biotechnology, and spend more on health and education, which really impacts the lowest strata of our population. And I'm sure they will give some impetus to healthcare, education, which really benefits the poorer people, and even some benefits for job creation. They'll have to give some subsidy or some unemployment benefits, because as you say, I agree, large number of people have lost jobs in the informal sector, in the unorganized sector.
Right. But what are the, so those are the areas of concern to look out for. In the event that the government continues to hold back, in the event that they continue to be fiscally hawkish and do not spend more and are not putting money into people's hands, what could happen?
No. If that happens, then we are in for difficult times ahead. But you see, what the government will do, and where there has been a little disappointment, is on disinvestment. Government, in order to spend more resources, needs money, needs resources.
Right.
Now, you see the last year's budget said that over 2.1 lakh crore will be raised through disinvestment.
Right.
We've only raised about 6,000, 7,000 crores so far. Right. So I think the disinvestment should really be fast implemented in an efficient and quick manner, because government gets more resources, they'll be able to spend more resources. So this investment has been a little slow every year. We never reach the budget. We never reach the anticipated number which is given in the budget.
But you're hoping that that's going to happen. But on the other side, when you look at corporates, how would you explain this reluctance, as you pointed out, of corporates also to spend more in investment, to do more capital, investment, to create more jobs? Are you also somewhat disappointed, in a sense, with your own fraternity for not stepping up at this time?
No, I think again, government's effort should be to industrialize more, start new factories, new plants, new capacities, build new capacities. And I won't be surprised if even the government comes out with some accelerated depreciation or something like earlier we had that investment allowance to encourage companies to spend. You see, if I give you a small example, a few states like Maharashtra and a few others have reduced stamp duty on real estate up to 31st December. You know, on Friday, we had 17,000 registrations for property in one day in Maharashtra. The average is 9,000. This was 17,000. And the trend is continuing. So basically, you need an incentive, you need a fillip, you need a carrot. Then people will spend, then people will put up factories. So I think the government has to incentivize the corporates to build more capacity, that India is going to grow, India is going to get back on track in the next year, and we need more capacity because we are a consumption-based economy.
But also, as far as corporate practices go, at a time when a lot of corporates are hit, HDFC Bank is amongst the banks, and especially when the banking sector is feeling strain, seems to be doing very well. Your colleague, or now I suppose former colleague, Aditya Puri, has been rated by The Economist as the best banker in the world. So firstly, congratulations for that. But what would you say are the main reasons that is the case, and what are the lessons there for banks, and in fact for corporates as a whole, to keep the ship steady at a time like this?
See, the issue really with, if you categorize banks, there are private sector banks, public sector banks, and foreign banks. So if you look at the private sector banks, they are much more aggressive in lending, and the public sector banks are really trying to sort out and clean their balance sheet and clean their NPAs and restructure their loans. And even many of them are short of capital.
Right.
A couple of PSU banks recently raised capital from the market.
Yeah.
But market means other banks had to subscribe to it and LIC had to subscribe a major part to it.
Right.
So basically there's capital constraint and government doesn't have adequate resources to recapitalize the bank every year, PSU banks every year. But while a few private sector banks are taking risks and giving loans, whether they're secured or unsecured, we have a large unsecured portfolio also, but it is performing very well. So you should not be risk averse in lending. You must be cautious. You must be conservative, but you can't be risk averse.
Okay, so that's what has stead you in good stead. But I have to ask you the next obvious question, which is your take on the RBI's recent proposal to relax norms to allow corporates to enter the banking sector. And I'm sure you've seen the very, very strong debate that sparked off because of that. You must have also seen the concerns voiced by the likes of Raghuram Rajan and Viral Acharya. What's your view on it? Are we ready for this yet or not?
See, first of all, I'd like to answer the question this way, that RBI governor himself has said that this is a working group paper. It is not RBI's view. They have put the paper in public domain and asked for comments, suggestions, criticisms to be given by the participants, by anyone who wants, up to 31st of January.
Right.
So I don't think this is going to happen in a hurry. Somewhere in the working paper, it said there should be tax neutrality.
Right.
To have tax neutrality, you need amendments to the Income Tax Act.
Right.
Which again cannot happen so soon. RBI Act will have to be amended to allow corporates also into the banking sector, which again means Parliament and all that. So it is really not RBI's view. I would like to say this is not the Reserve Bank's official view. It is the people who worked on that, although they may be employees of RBI, it is their view. But so we have to wait till and see what is RBI's view. My personal feeling is...
Yes, go ahead.
No, I'll tell you.
Yes, go ahead, sir, go ahead.
I will tell you, my personal feeling on whether to give corporates licenses is, if the corporate has more than 50% of its total business in the financial sector, then they should be given licenses. But if the corporate has majority of their investments in manufacturing and other activities, then I don't think they should be given license. So if you are in the financial sector predominantly, then you give a license to them.
Okay. Interesting. So you're drawing a distinction there, but those like Raghuram Rajan and Acharya are arguing that this is worrying across the board. They're saying in the paper that they wrote, why now? Have we learned something that allows us to override all the prior cautions on allowing industrial houses into banking? We would argue no. Indeed, to the contrary, it is even more important today to stick to the tried and tested limits on corporate involvement in banking. Otherwise, highly indebted and politically connected business houses will get these licenses, and that will lead to cronyism.
No, I entirely agree with that. So I don't think that corporates are going to get a license tomorrow or in the next year or so.
Sure.
It's going to take time, and it will be on the involvement of the corporate in the finance world.
Okay. So that the fact that you need to have a substantial proportion of your business, more than 50% you're saying, in the financial sector, that should make you eligible.
That is my view. It's not the RBI's view.
Of course.
The working paper also.
No, I know. That's the Deepak Parekh view. But what sort of companies would you think would match that criterion?
See, I think a Bajaj would match that criteria, because the Bajaj Capital, the Bajaj Finserv, their insurance, asset management, their NBFC is pretty large compared to Bajaj Auto.
Okay.
Then a Shriram would qualify, because Shriram is a number of financial sector.
Right.
So Shriram Transport Finance and Shriram NBFC, and so a Shriram would qualify.
Right.
So at the moment, I think a couple of these will qualify, if my view is considered. But
Okay.
this is only an individual's view. It is not anywhere said. This is
Of
my
course.
interpretation.
No, I
that
know.
this could be a good criteria to look at before giving corporate a license.
Okay, look, the Deepak Parekh view still carries weight, and it's certainly an interesting view for policymakers and regulators to consider. But let me ask you in conclusion, Mr. Parekh, we've spoken about the economic challenges and the economic downturn, but latest indicators, again, the Economist also tracks democracy, the state of democracy in different countries. And they are also pointing to a democratic downturn across the world, but also in countries like India. Is that something that you also feel is something that we have witnessed in the past year or so, and is that something that concerns you?
It is certainly worrying what we are seeing, but I would not put too much emphasis or stress on the Economist. I have not seen a single positive article written by Economist in the last 30 years.
Okay.
So I would not take Economist as the guiding principle or as someone who said that, because they've always been anti-Indian.
Okay, but outside of that,
irrespective of the government.
Okay, but outside of that, outside of the Economist.
No, see, for instance, in a democracy, you need a strong opposition. We do not have a strong opposition now. And that is the worrying factor. We need a second party. We need an opposition. Because in democracy, there's always debate, discussions, dissent,
yes.
And which is missing today because they have a weak, very weak opposition.
That's a good point. I mean, and coming from you, the fact that our opposition parties are simply not up to scratch to be able to take on the government and to engage in that kind of criticism and dissent, but also worries about how dissent and criticism and protest is also being constrained, is being stifled?
I think it's overstated and overemphasized or whatever. I don't think a concrete suggestion, when we have meetings with the finance minister or, recently we had the Prime Minister had a meeting with sovereign wealth funds,
yes.
And some of us were asked to speak. And that time, I think they're quite open to listen to things.
Okay.
I don't think they're averse to listening.
Okay. Last question. As you look ahead to 2021, if there is one thing that you would like to see the government do, or your one expectation, what would that be? I know there could be many, but just one.
Increase spending in infrastructure because it creates jobs, which are absolutely urgently required.
Okay. All right. Well, let's hope the government is listening and watching. But Deepak Parekh, thank you so much indeed for joining us. It's always a pleasure. Thanks very much indeed, sir.
Thank you, Srinivas. Thank you. Take care.